Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES pulled back and tested the 64.5 high volume node yet again, where responsive buyers were active. Heading into the open, 62 to 64.5 is going to be the key support, and we're also going to use that area as the short-term bull bear zone. On the upside, we have the first area of resistance at 76.75 to 78.75, and then we have stronger resistance at 85 to 87 and 89 and 91 quarter. If you zoom out a bit, you can see that right now the market is balancing essentially between the 62-64 half initial support on the downside and the 85 to 87 resistance on the upside. So we've established this new 4-day balance right over here. And given that we don't really have any major economic catalyst due today, and then we have the employment report due tomorrow morning, there is potential for the market to continue balancing within this range as long as we're not seeing any extremes on the underlying internals and we're not getting any excess weakness or strength on the NYC tick. So on the downside, 62 to 64 half is going to be key support as long as buyers are holding ES above that area. It means that this recent short-term balance is intact and we can continue to balance within a range. And in order to get a breakdown below 62 to 64 half or any kind of sustained breakdown, we would have to see excess weakness and sustained downside momentum on the tick, where the tick is holding completely below zero and printing some negative extremes. And simply a lack of weakness at 62 to 64 half or a lack of downside momentum can result in buyers being active at that support zone, and from there the market can continue to balance within this recent range. On the upside, like I said, the first area of resistance is 76.75 to 78.75, and then the stronger area is up at 85 to 87. Now, if the market reaches 85, 87, by that point in time, you would begin to exhaust the range potential of the day, so a sustained break above 85 to 87 is very unlikely. Even if we get broad market strength and upside momentum, you would be exhausting the range beyond 85 to 87. And again, given that the major catalyst is due tomorrow morning, it's unlikely that we're going to put in a big breakout beyond 85 to 87. So right now, this is really the range that we're working with. Downside support at 62, 64 half being key, and on the upside, 85 to 87 being key resistance, and then the naked VPOC and open gap and high volume node at 2289. On the downside, in the event that we do get a break below 62 and we are seeing excess momentum and weakness, the market could quite easily tag the 51 half to 53 half zone and possibly the 48 half, which marks the 3-week low. Now at that point in time, buyers can step back in because now you'd be exhausting the range on the downside. Now, a break below 62 to 64 half does mark a shift in the short-term bias, and it would signal sellers gaining dominance and momentum. So we may not get a big response at support anymore, simply because you'd be exhausting the range by 51 half to 53 half and 48 half. That alone could be enough for short sellers to start taking profit, and that of course can result in a bounce at least back up towards perhaps the 58, 59 area, and maybe even back up towards 62. But 62 to 64 half is key support until broken, and we're also going to use that area as the short-term bull bear zone. So those are the main ideas. Heading into the open, our short-term bias continues to be neutral. We have to be open to setups on both sides because we are in a very balanced market at the moment. So those are the main thoughts. Let's see if the buy side can continue to defend 62 to 64 half. That'll help establish the intraday bias, and we'll take it from there.